Today, I'm just down over $40,000 on the trading day, and in this review, I'll be talking about the losers that we ended up taking, how we more so had our bias developed, what went wrong, and how we could improve from this. So let's get right into it. Today was a pretty tough day. Again, it was a half-hour day, which if you guys don't know, with the room that I have, we size specifically on certain days, and we use R as our risk as it's the most transparent in my experience through doing Discord, right? It's the easiest to follow. Everyone has their set dollar risks defined because not everyone has as much money as I do, or some people might have more, some people might have less. R essentially is just the most transparent way. That way we could all equally be up or down R-wise. Today we're down to -1R, took two half-hour losers, and I'll be going over them. So kind of looking at the screen, you could see that the first idea here in play was a potential long. Now, Lento, why was your bias upside here off the open? Well, if you look at the open here and you look at the 15-minute time frame initially, on ES, we did a good job through building structure overnight after initially seeing ES come down here through Asia and then see a dump. We saw structure develop, we saw a good push back up through London, and we saw a good push past Asia highs for us to potentially look to take a long and play. We see a retracement here where we see price come down into this 15-minute gap, then eventually see a push back up. But the more important thing, and why I was relatively bullish here for price off the open, was because of the fact that we had an hourly time frame BPR. So if we go to that BPR real quick, you could see that this is the BPR that we had, if I recall correctly, right here. This is the BPR that we had. So this injunction with this right here, we had an hourly BPR, which is a balanced price range. And you see, right, obviously not this part, this is PM, this is after our trading session, but you could see upward to the point of the open, we see price yet again bounce the BPR, right? We have bounced it several times. Here, once, here, twice, here, 3 times, and now a 4th time, right? So for me, hourly bounced off the BPR, and then you see London coming into the open trade relatively bullish. So that junction is what caused my initial bullish upside. However, here is the thing with the trade. If you look at the trade here that we ended up taking, it was a 5-minute bearish gap, go bullish inversion, and we end up seeing price essentially come up here and offer the initial inversion entry. Here's the problem. I still end up taking this trade after our initial liquidity target gets taken out. So if you look at the idea that I ended up posting, right, ideally the time and place in which we take this trade would be the initial inversion, right? We always typically take our trade entries off the invert sequence. So instead of my entry being here, it should have been more so around here. Therefore, I would have taken this trade with liquidity still being open. However, with our actual entry, we ended up taking this trade after liquidity was already taken. So that was the one improper thing that we did with execution on this trade. I think the overall idea behind this trade was good. It was just an internal day, and this trade idea did not pan out because we had already taken liquidity in the London high. And so we ended up seeing price essentially create a lower high as opposed to creating a higher high and eventually see price come back down. So the stop loss off the trade, if you're curious, was the model stop in place, which was the 5-minute fair value gap wick low, right? Wick lower candle open, preferably. And we see price essentially come down here and essentially get rid of that. It was a good stop in validation because we see price dump quite a bit lower, eventually leading into overnight lows. But again, the thing that we could have done here to simply avoid this and utilizing proper execution is every time, chat, what's the number one thing we always focus on when it comes to developing our bias? It's also draw. And draw was clearly taken out here. There was no interest for us to take this. This, more so at this point in time, is a pattern trade than it is anything else, in my opinion. This was not. This was because, again, you have liquidity sitting there, but with us taking out a good area of liquidity and actually getting our first opening range move, right, chat? Like we talk about, utilizing the opening range move. We did not wait for that here, right? The opening range move had occurred here. This is when your opening range move happened after the New York Open. We simply took a trade prior. So just a bit of impatience from us. Then we ended up looking to flip our narrative to trade towards the downside. And after initially seeing a hard dump, especially with NQ being the weaker asset and looking for downside more, I looked for price to finally come down here and look to invalidate the hourly BPR. Here was the idea. After that sell that we had, after initially getting stopped out, in my head, okay, London high swept, and now we're seeing a good intraday sell. This could look to target overnight lows, which we eventually did. Here is the issue. We ended up taking a trade in price that was supremely choppy off the second take here. Very choppy. That's number one. Number two, we end up taking confirmation off not proper confirmation, right? We end up taking this trade right as the candle closes, what, a tick or two below the gap go invert. If you guys know me, if you guys have watched a ton of our reviews, if you know how I trade, I look for engulfing closures. I look for good candle inversions. We do not end up doing that here. So there's a sloppy day from my end. Executions aspect should have been a bit more aware. Because I feel like I like to think that our trading strategy is very simple when you bring it down to the T, and I just kind of messed up on the simplicity of it. So it happens. This is good to show you guys that even a trader like myself, we still have off days. There's still going to be days where you're not going to be perfect, and it is what it is. But yeah, could have definitely been a bit more patient. This trade, as soon as we took, instantly wanted to draw down and instantly hit our stop. I guess the unfortunate thing with this trade too as well is that we got top ticked, where we had our stop be the swing high, came up, swept that, and eventually came back down and actually ran our objectives in mind. But just a bit of an unfortunate entry. And so yeah, that's pretty much that. A bit choppy. Eventually, like I said, we get the move, but could have definitely done a bit better. So that's pretty much that. If there's one thing I want to learn, and you guys learn from today, it's just make sure you stick to your system and you stick to your executions. When it's really there, and once you're dialed in, execute. If not, make sure you stay dialed. If you're not dialed, don't trade at all. Simple as that. So with that being said, hopefully you guys enjoy the review. I'm going to catch you guys in the next one. Peace out.